In this week's episode of the Stockscores Market Minutes, I'm going to give you some tips on how to get started in day trading. I'll then do my regular weekly market analysis. We'll figure out where the markets are likely to go next week. We'll do the day trade of the week on CENX, and then we're going to go hunting for opportunity with the Stockscores market scan, all coming up. So one of the common questions that I get from people who watch these videos, people that visit my website, is how do I get started in day trading? They don't really know where to begin. What do you need? So today I'm going to try to give you a little insight into that. There's a lot of different things that go into it. It's important to realize that day trading looks really simple, but it is not easy. And the most important thing is that you learn how to do it. You know, many people just jump into trading without any knowledge of what they are doing, and that's a pretty fast way to lose money. You may get lucky on a few trades, but if you don't learn what to do early, you won't last in the day trading business. So what you should be learning are some basic financial theory about price. I don't think you need to know a lot about finance, but just some basic theories on why price changes, what price of a stock is based upon is important. But the most important thing is to have a strategy, the rules for entry, rules for exit, and rules for risk management based on quality data analysis. I don't ever trade on gut feel. I want to trade on analysis that I've done that demonstrates that my rules work over a large number of trades throughout different market conditions. Now then there's the mechanics of order entry. How do you actually put in a buy order? What is a stop loss order? How many shares should you buy? All of those sort of things that come with the actual execution of a trade, or things, of course, that you need to learn. You need to have a very sound process to identify and execute trades. You know, it's not enough to say, I will buy when these rules are met, but how are you going to identify those trades in a timely fashion? The market moves very quickly sometimes, and if you don't have good process, you won't be able to make even the best strategy work. Now, risk management is super important. You know, I always say that capital preservation is our number one goal. And so you need to have rules for when to take a loss, because losing in trading is inevitable. You are going to lose some of the time. What's important is that your losses are not so big that they outweigh your profits. Now, of course, there's different types of trading software and tools. Some is web-based, some is actual software you install, and you need to learn how to use those. Now then there's the things that you need. You need capital, obviously. Although I always tell people that no matter how much money you have to trade, I actually recommend that you start with very little capital. You know, if you have $1 million, start with nothing. Just paper trade for a while. Practice, learn your craft. Again, trading is simple, but it's not easy, and it does take practice. Now, the reason I say start with no capital or very low capital is why have your mistakes cost you a lot of money? Learn first and then start with a small amount of risk capital and slowly increase that as you gain experience and confidence. You're also going to need a brokerage account. And so you want a brokerage account that is suitable for active trading. Not everyone is. So do some research into the types of brokerages that are better for the active trader in whatever area of the world you live. Now there's analysis tools. I use something called TradeStation, which is great software for day trading, but there's others. There's things like TC2000 and TradingView, and those are all great. My preference is TradeStation. You need a trading platform. Now this is the actual software that you install on your computer that allows you to execute trades through your broker. Now, sometimes your analysis software can also be your trading platform. Some platforms are also analysis tools. I use two different ones. I have a brokerage platform, which I'm executing my trades through, and then I'm doing my analysis in TradeStation. And then, of course, you need an internet connection. The beauty of being a trader is you can do it from anywhere as long as you have an internet connection. So that is an important criteria. All right, continuing along, you must, and these are the things that you have to bring, you must have emotional control. We have an emotional attachment to money, and that will cause us to make many mistakes if we do not get mastery over our emotions. We need to be disciplined. We need to be focused. We need to work hard, and we really need to be determined because it takes time to learn how to trade effectively. It's not going to happen overnight. You have to put in the effort and you have to be determined to make it happen. It's really no different than anything else. If you want to be a great athlete, if you want to be a great lawyer, you got to work hard. You got to be determined to make it happen. Trading is no different. All right, let's get into this week's market analysis, starting us off with the US markets. And here we have the short-term chart of the S&P 500. And if I draw a line like this, I've got my upward trend line, which was broken late in the day on Wednesday and into Thursday. Now, does that mean that we're destined for lower prices? Not necessarily. I think more than anything, it could be just the start of a sideways trading range. We may see the market sort of oscillate in this range, something like that. Now, one thing that I want to highlight here is something called an exhaustion gap. This big gap to the upside, which happened on Monday, comes after the market had been up for a number of days. And when you get these large gaps after a number of upward days, they often pull back and fill in that price gap. So a price gap occurs when, the market closes at one price and then the following day opens at a considerably higher price. You can see that on the chart, and you can also see that the gap got filled because the market got a little ahead of itself, a little emotional, and that caused it to go lower on that particular day, on Monday. And since then, we've been more or less going sideways. All right, moving along to the longer term chart, you can see that this week, although we broke through resistance, we did close below our open. And that is a little bit of a concern. I think we could see basically some sideways trading, perhaps a little bit more of a pullback. I don't think there's a crash imminent yet. We don't see those signals yet, but certainly we always watch for that. And we'll keep an eye for a break of an upward trend line in that regard. Looking at the NASDAQ 100, you can see that we are sort of in this little sideways range the last few days. And again, we had not so much of a gap on Monday like the larger cap stocks did. The tech market was really sort of losing its momentum, and it had a bit more of a pullback as well. So it does feel like the tech sector is kind of underperforming the larger cap stocks. The tech sector has been a big leader, and now I think it's taking a little bit of a break. Looking at the long-term chart of the NASDAQ, you can see that it has not yet managed to break out. We have this sideways trading range with some volatility up and down, up and down, up and down. But until we can make a good break through resistance, preferably from some low price volatility, I'm sort of neutral on the NASDAQ stocks. Looking at the Russell 2000, a little bit more strength here than usual. We've seen a nice little breakout through these highs. Again, we had that opening gap on Monday, but we've held up quite nicely. So there may be some money moving into the small cap sector and perhaps out of the tech sector where a lot of the strength has been in recent months. On to the Canadian markets, and here is the TSX 60, and it's basically still in that upward trend, but it is losing its momentum. And so I think we could see the Canadian market stall out here short term. The longer term chart, you see why it has rallied into resistance on the weekly time frame. And when markets rally into resistance, they usually get stuck at resistance. So again, I expect a little bit of quiet trading near term. On to the TSX Venture, and it's hanging out in a sideways range. No real action here in general, although there are pockets of strength in some individual stocks. So if you find that TSX Venture stock that has a good chart pattern break, well, that's worth considering. On to currencies. US dollar really struggling. It's got falling tops. It's right at support. Hasn't broken down through support yet, but that could come at any time. The Canadian market, kind of the opposite. It has rallied up to resistance, getting stuck at resistance, and it may go sideways here for a little while. Commodities? Well, gold had given us a really nice buy signal on a break of the pullback last week, and then this week it really lost its steam. With the market gapping up on Monday, gold gapped down. Now gold is still holding support, so it's not too bad, but the positive signal there has almost been negated. And so I'm a little bit concerned about gold. I was feeling pretty good about it last week, and I'm going to switch teams now and say I'm more neutral or even slightly bearish on gold. We have to keep a close eye on it in the next week or two. Oil's managed a little bit of a comeback. It had been looking kind of weak. It's still pretty boring. It's stuck in a sideways range, but at least it's not losing price action to the downside right now. And finally, the fear chart, you can see fear is pretty low, and therefore I wouldn't be too concerned about a correction just yet, but of course we always watch for the break of trend. So my ratings then, long-term neutral on US stocks and long-term bullish and short-term neutral. Canadian stocks neutral on both time frames, gold neutral on both time frames, and oil neutral on both time frames. A break to new highs early this week has been met with some selling pressure. So while the trend is up longer term, there remains that short-term concern. You feel like the buyers are a little tentative. Gold has reversed its strong signal from last week. Oil has improved and fear is low. All right, now we're going to take a look at the day trade of the week. This is an example of a trade that came up in my active live service. We have live real-time alerts driven by algorithms that monitor the entire US stock market all day long, and we look for certain signals. Every week I try to share with you one of those just as a learning experience of what to look for. So this week's day trade of the week is CENX. We always look for the action candle. That's my own indicator. You can see the little pink dot there. What I like about this is the big spike in volume and the stock coming alive from being fairly boring. Our risk management had us enter here with our risk level there, although a little lower stop would probably be more appropriate. The stock moved up quite nicely. For every $100 of risk, you took a position of 1,110 shares, and that meant $9,200 in capital, or with margin, $3,100 in capital. This trade by the end of the day was up 6.4 reward for risk ratio. That means a $640 gain on $3,100 of capital required, a 20.6% return on a one-day hold. And that is a pretty nice little day trade. All right, so now let's go jump into the Stockscores market scan. This is where we look for longer term trades. Not everyone wants to be a day trader, so we have some tools at stockscores.com to scan through the market in search of swing trading and position trading opportunities. This week, we're going to run a position trading market scan that looks for stocks that are behaving abnormally. We know that most upward trends start with abnormal activity. So I run a scan called the abnormal day up. We just jump into Stockscores. So I'm going to select from the preset menu the abnormal day up scan. We'll just go abnormal breaks US and run the scan and take a look at the charts. Now I like to look at charts in the what we call the gallery viewer, where I can see a lot more charts in a quick amount of time. And what I'm looking for here are stocks breaking from predictive patterns. And when I see one, I'll show you what I mean. So far, none of these are really great. It takes some time to learn how to do this, but that's what I teach in the different courses that I do on Stockscores. Really, to sort of simplify it, I'm looking for abnormal price moves out of low volatility chart patterns. So when I see a stock that has been kind of boring, not really doing much, and then it comes alive with abnormal activity, well, at that point, I want to take a look at it. So WHLR has that. You can see here the stock was in sideways, what we call a pennant pattern the last little while. And on Friday, it traded strong volume, abnormal price move. That looks pretty good. Now, when I see something I like, I always take a look at the 3-year weekly as well. And here I like this chart because it is a good long-term reversal pattern. This is something I call a bottom fishing pattern. When a stock has been in a downward trend, it builds a base and then starts to build rising bottoms and breaks from the rising bottom. You can see the strong volume there. So I'd give that a 7 out of 10, which means I think it has a 70% chance of moving higher. Now just keep cycling through here. See if we can find one more. This summit looks pretty good. SMMT, blow that up. See the strong volume coming in this week. It's been going up for 3 days, so it's a little bit late. You can see it's a pennant break, but I'm going to take a look at the 3-year weekly again. And there I see a pretty good pattern. Here you've got a market that has, the stock's been under accumulation for a few months. You can see the rise in volume over the last little while, and there's that break from a pennant pattern with abnormal price action. I'd give that one a 7 out of 10 as well. So there you go, 2 stocks that I think have a 70% chance of moving higher in the weeks and months ahead. Not day trades, they're not going to go up necessarily tomorrow, but longer term trades where we're going to probably hold for a couple of months at least, but something to consider. We'll hope that you've enjoyed this week's market scan. If so, hey, click on the like up, the thumbs up button, the like button. And if you have some thoughts on where the market is going in the near term, leave your comments in the comment section. Most importantly, subscribe to the channel and trade well.